Well, you guys, everybody, excuse me, you've got the markets closing on this Monday, June 22nd, 2009. We're pretty much closing at our lows of this session. Let's walk you through the numbers. You've got the S&P 500 down 3% at 893. Keep in mind the S&P lost about 2.6% for last week overall, so another big drop today. The Dow, which lost almost 3% last week, down another 2.4% in today's trading session. And the Nasdaq, which was also down about 1.7% last week, losing 3.3% in today's trading session. Let's talk about some of the groups, because utilities just barely eking out a gain. Telecom trying to hold on to one as well. Those groups slightly higher in today's session, so that's where investors were looking for a bit of a safe haven in today's trade. Related stocks, financials, I should say, also down big. Materials names down more than 5%. That energy group also down a lot, down about 4.5%. And again, I mentioned those financials. They were down big as well, a decline of 6.1%. Now, the S&P 500 posting its biggest loss since April 20th today. Chris is down at the New York Stock Exchange. And Chris, seems the gloomy weather we had all weekend here in New York City kind of mirrored in today's trading action. Pretty dismal.
Pretty dismal. We just couldn't shake it. You know, this is the third straight Monday that we have seen losses here at the New York Stock Exchange. Remember, we're coming off of a huge rally since mid-March. This isn't something we're used to at this point. And the numbers, the drops that we saw were pretty significant. I mean, you take a look. We hadn't seen these numbers in a while. Financial stocks down almost 7%. If you look at the intraday trade for that, that's the most since May 11th. Meantime, material and energy stocks down 4% each in that intraday trade. So some pretty big percentage drops here that we haven't really seen with consistency for quite a while here. Financial stocks, of course, ending the day as the leading laggards of the session. All 80 stocks on that index in the red. Big banks leading the way. Now, that index from a technical level coming very close to the 50-day moving average. Laura Lee is going to talk to you a little bit more about what this means exactly, but certainly an indicator that people were watching. We did have news today from Washington that perhaps played into the group, specifically the SEC saying it may force investors to disclose derivative stakes in companies. Now, why is that such a big deal? Well, because a lot of these hedge funds do it. It's going to make it very difficult for them to accumulate positions without giving away they're showing their cards, essentially. So certainly some concern there from that financial side. Also within the industry, you had JPMorgan come out say, or it didn't say, but there's news. People familiar with the matter said that it plans to sell $1.5 billion of bonds. They're going to be backed by credit card payments. Remember that they're no longer participating in these FDIC-backed bonds. So certainly something to point out there. Now, the important thing to remember within these financial stocks to drop is that it comes ahead of that all-important decision on Wednesday. Tomorrow, the FOMC meeting begins to meet, and we're going to have the announcements from there, not so much on what's going to happen with the rate cut, but what's the language going to be indicating and what's going to happen with Treasury purchases, and that is what this industry certainly will be watching. By the way, the volatility index, or the fear gauge, as we like to call it, kind of insinuating, showing us that investors hedging themselves ahead of that decision, Carol.
Hey, Chris, got a pressure on this, though. You mentioned that language from the Fed that we'll get later on this week. Of course, something investors will be watching very closely is what the Fed has to say about inflation. But today, that really wasn't a concern, was it?
Yeah, no, today was not a concern. We've been reporting it all day. Certainly, that drop in commodity prices just playing directly into this marketplace. Concern, the World Bank coming out, saying that it doesn't see growth as much as it had seen previously in March. Certainly, that went into our commodities, and that in turn went into our energy and material stocks. It's the vicious cycle, as economists like to call it, and that certainly played into today's session.